Uh, Good morning, guys. Welcome to today's morning market call. My name is Samson Mzera, and I will be taking you through what to expect for the day. I'm seeing we've started joining. If you can hear me, just simply wave on the chat section. Also, feel free to ask questions as we get along with this session. So feel free to ask questions, and yeah. So if you can hear me, just say hi on the chat section. We have a chat section, the Zoom button, the one with the. Let me just type over here. So if you can hear me loud and clear, then we can. Nice. Okay. Hey Anne. Yeah. So if you can hear me, just say hi there. Hey Gerald, Helen. Right. Great. Okay. So Anthony, hi. Yeah. So today we have one of those big days in the markets, and what we have today is the Fed decision. So let me just pull this here. So it's been a packed week, and we're actually expecting the pound reading to come in. So obviously, when this comes in, we do expect first off the pound, but I don't expect it to react as much because we still have, if I'm not wrong, monetary policy meetings tomorrow. But we'll look at the pound in a minute. Let's just see what this turns out to be. So that's 2.6 as expected, 3.5 for core. So this is largely in line with what the market is expecting. Now, if you go to the pound, let's see how it's reacting. If you go to the pound, we've been in this consolidation. Again, we will talk about this, but we have seen in general sort of a consolidation within this as markets await that FOMC reading and the the Fed the BOE reading. So let me get back to this. Okay, so let's just cover this first. This is the main event for the day. So if you miss any news, just a minute. Yeah, so if you miss any news, this should be the main event for the day. Yeah, this is the federal funds rate, and it's basically the interest rate that the US announces, the central bank of the US announces, and it really has a big impact on the dollar. Not only when they announce, but even when there are expectations about where it's going to go. And let's have a look at those expectations. So, what do I mean by even with the expectations? When we are expecting something to happen, generally market participants will react even before that thing happens. So, I usually give examples of even in normal markets, if you're expecting some major news to come in, for example, you're in real estate and you're expecting maybe the construction of a mall somewhere next to, you know, uh, a parcel of land, then prices of land around that area are going to start increasing even before the markets or even before that construction happens. And it's the same thing for the financial markets. You usually have market participants reacting to expectations. And what are the expectations? We do know that for interest rates, we do know that for interest rates, in a nutshell, a higher reading usually results to a stronger currency, and a lower reading results to a weaker currency. Now, having said that, what is the forecast? We are expecting interest rates to come down from 4.75 to 4.5. And there's usually a very good website to look at these things. It's called the CME Fed Watch tool. This is it. So for today's meeting, 18th December 2024, a big 95%, a lot of analysts are expecting there's a 95% chance that the Fed is going to lower interest rates from the current 4.75 to that range of 4.25 to 4.5%. Yeah, so there's a very big opportunity. So this is where you see what people are expecting. And because you're seeing this, then we should expect it to react accordingly on the markets. Now, we've said number one, low interest rates affect the currency, but low interest rates is also good for business. Yeah, so things like stocks and companies should be performing well, because what happens when there's low interest rates, you're able to borrow funds to expand and grow your businesses, which is why we are seeing, if you look at an index such as the US 500, we have been seeing this on an upward trajectory. So this is the USA 500. If you look at 4 hour or the daily chart, we are basically in this uptrend. And why? Why so? Uh, it's very clear that because we are heading into a year where Trump is president and he likes businesses and he's probably going to put pressure for a lot of guys to, or the Fed to continue lowering interest rates so that the business environment is conducive, then you expect things like the Nasdaq, in this case the US 500, to gradually go higher and higher and higher. So for example, in this case, we are in an uptrend, and what I've seen traders doing is just waiting for pullbacks and then getting in. So like piling small positions as the trend goes, because it's very unlikely, unless something major happens next year, it's very unlikely that in a year where we have uh, a pro-business president like Trump and very low interest rates, it's very unlikely that the S&P 500 is going to end up negative for the year, for the end of 2025. Why so? If you look at the history of the S&P 500, oh sorry, the Nasdaq 100, US 100, there are very few years where the price in January, this is the weekly chart. So if it's a weekly chart, this dotted line is January, is the start of the year. So we can say this is 2025 over here. So objects. So you can say this is 2025, and then we can say this is where is it? This is sorry, this is 2024. This is 2023. This move over here. So these are different years. This is another year. This is another year. Now we are going into a new year. Yeah. So there are very few years where the S&P, the price it started at January, is lower than the price in December. Yeah. In most cases, when the S&P opens in January, for example here, this is January, this is 2019. Yeah, it opened here. The price in December here, the price in December is usually way higher. Yeah. 2019, 2020, same thing. We opened, we closed higher. In 2022 is when we had this, and there are very few years where that happens. Yeah, there are very few years where S&P or the US 100 opens, where it opens in January and where it closes in December, the price is lower. Yeah, and this you can go back test and see. You can even count the number of years when prices were lower in December than they were in January. So what do people do? The US, these indices are linked to people's retirement funds, retirement savings, and things like that in the US. That's how their retirement scheme works. So most of these funds, citizens usually opt to just buy stocks. Yeah. And when they opt to buy stocks, it usually just forms a repeating an ever-growing demand, supply of buyers in the market. Yeah. That's why you're always seeing the Nasdaq over time or the S&P 500 over time, it usually just goes up. Yeah, so a lot of traders know this, and that's why we have long-term positions. For a lot of people, they have long-term positions in Nasdaq, in S&P 100, because you're able to know over time, unless something happens like what we had with the pandemic in 2020, unless something extremely weird happens, it's very unlikely that we will see prices go down significantly. And by significantly, we're talking about maybe 20% drop of price, and that's a very huge drop. It's very unlikely that we will see S&P or, for example, Nasdaq do that. That's very unlikely. Yeah. So that's pretty much for Nasdaq. So as a trader, if you're doing a trend following system, I'd recommend you look at this one very long term. It's one of those things where you also treat it as an investment. So you look at this very long term, and you're looking for pullbacks. Whenever it's cheap, whenever it becomes cheap, that's when you look for entry opportunities for you to take a position. For example, if I am looking at this, we have this level over here where prices started pulling back and then we broke through. Yeah, so always use your technical analysis to confirm your thesis, which is the fundamental analysis. So in this case, we had prices breaking through, and they have supported themselves higher since. So traders will be looking to see, in the event we see significant pullbacks, first level I will be looking at, for example, is this one, the one I've already plotted. Next level is this zone over here. So you're not just blindly taking trades. What you're looking at is you need to see market structure confirm your hypothesis, confirm your theory. Yeah. So the other level I'll be looking at is here because of this imbalance, and the other level I'll be looking at, if at all I see a pullback, is here. So you're not just blindly taking trades. You need to conduct some sort of analysis to confirm your entries for those points. Yeah, so that's basically the Nasdaq, the S&P 500, and the Dow Jones if you're trading indices. Let's move on to currencies. So we have said, for if we are expecting interest rate cuts, then the currency should be weak, in this case the dollar, and stocks should be higher, because low interest rates good for companies. If companies are doing well, the value of the shares are supposed to go up, hence the index is supposed to go up. Now, what about currencies? When it comes to currencies, it's a bit tricky, because you're now not only looking at one individual currency, you're looking at them as a pair. So in this case, for example, you have Euro USD. So let's just look at what is going on. We already know that on the side of the US, we are looking to cut rates. What about on the side of the Eurozone? So this is the news for Euro. Euro strengthens above that. All eyes are on the Fed rate decision, which is today. Okay. So across the pond, the European Central Bank President Christine. Okay, let me just zoom this in. Further, okay, so they're saying basically there's a high likelihood that they're going to cut rates further. The direction of travel is clear, and we expect to lower interest rates further. Yeah. Lagarde additionally said the ECB government. Let's see. Yeah. So why are they lowering interest rates? The euro economy is not doing well per se, so they need low interest rates so that companies again can start doing business and borrowing and things like that. So now this has already, or is being priced in as we speak. This explains what we are seeing. If you have any questions again on the chats, you can always comment. This explains this huge mega trend, downtrend we are seeing in the markets. Yeah. So technically, the euro has been going lower because we're expecting cuts from the ECB. Now, someone can ask, okay, so why is the euro strengthening against the dollar, and yet even the dollar we're expecting cuts? The answer comes to the pace of these cuts. Who is going to cut slower, or who is going to be left with higher interest rates at the end of the day? Because they don't just drop interest rates abruptly, they do it in stages. Yeah. So if the market thinks the euro is going to, or the eurozone is going to start cutting faster than the eurozone is going to start cutting faster than the Fed, then the euro is going to weaken. If the market thinks the US is going to cut interest rates faster, then the dollar is going to weaken. And in this case, it's clear that the market thinks the euro, the economy is much weaker, so they need to cut interest rates faster. Yeah. So that explains that downtrend we are seeing. Now, what is the structure of that downtrend? Our most significant turning point, our most significant level is that. Why is this a significant level? Because we are seeing it broke this structure over here, and that is when we saw this push downwards. So whenever you have a level that breaks structure, then it becomes a significant level. And the only time the trend changes, is when, or the only time we consider a trend change is when we see price breaking a significant level. So technically, we are still in a big downtrend. Are we together? Technically, we are in a downtrend. Only time we will consider us going above this downtrend is and only when we see prices close above this area. That's when we will start saying, okay, the euro might be heading back higher. However, as at the moment, sellers still seem to be in control of this market, and we do have significant levels for the euro, because I know we have parity. Parity is when the euro and the dollar are the same. Parity is when the value of the euro and the dollar are the same, and in this case it should be, let me so just a minute, let me adjust this. Parity is when the euro and the dollar is 1. So there was a lot of speculation that we might be seeing us head back to parity, where 1 euro is equals to $1, but it's still a long way. Still a long way if you look at it. So what do we have so far? We've marked our significant levels, and we are trying to gauge how strong the Fed is going to come in with the statement today. That is going to guide us. Yeah, and we'll be speaking more about the statement later. But for now, what we need to know is sellers are still pretty much in control of this market. So most traders are looking at significant levels for them to try and see whether they can get in on the action. So in this case, there is that one. If you go to the 1 hour chart, it's looking a bit choppy over here, so I wouldn't use a 1 hour chart. I'll probably be patient and just wait for it to pull back up here. So that's for the euro. Now, pound has been interesting. So if you look at the pound, we are on the short term, we were in a clear uptrend. You see the CPI has had an effect. The inflation report on the pound has had an effect. We were on a clear uptrend on the short run, but this uptrend is within this consolidation over here. So we are in some sort of consolidation. The initial path for the for the pound was downwards. Yeah. What happened? We broke this over here. So we broke this, which was a significant level. So we broke higher. That means we are now in an uptrend. Only when you break a significant level is when you're in an uptrend. Yeah. Which created that. However, prices from this low, and if you want more information on significant levels, you can always organize for a class on market structure. So what happened? Prices went up and then came back and broke this key level. So now we are back in a downtrend. Yeah. So technically, you can consider this a downtrend. Now, if you move here, you can see there are a few key levels here and there, like this level where the price is struggling to go higher, and then there is this old high over here. Yeah. Now, if you're getting into the meeting, we already know what the Fed is thinking about. Yeah. However, we need to be very careful with this, because let me get back. We already know what the Fed is looking to do. However, we are not so sure about the pound. We have our meeting tomorrow. So yes, we know the Fed is going to cut, but we are trying to gauge who is going to cut faster. And tomorrow on Thursday, 3 p.m., we have the Bank of England coming out with a decision. And the most important thing is this one. Are the members looking like they will start cutting or things like that? Yeah. So far, that is providing a bit of strength with the pound. Yeah. Are the members looking like they're going to cut or things like that? So if we interpret this, here is how to interpret it. The first number is how many members voted to increase interest rates. So the first number is this first 0 here. So last time 0 members voted to increase interest rates. The second number is how many members voted to decrease rates. Yeah. So last time 8 members voted to decrease. So they usually hold meetings in committees. So last time 8 members voted to decrease, but now it's just 2. If there are fewer members who want to decrease the interest rates for England, that means the pound is expected to be strong. Yeah. If there are fewer members expected to create. So that differential might lead some traders to believe that we should see a bit of a stronger pound to the dollar. Yeah. Now, what does that mean on the charts? If at all that is the expectation, I will be looking to see in this move over here, number one, are we able to break and close above key levels? Are we able to do this? Break above a key level, close and hold. Break above this, close and hold. That's how you confirm your analysis. So are we able to do that while we see the pound strengthening against the dollar? If it fails, and if the only time it's going to fail is dependent on either the Fed being very hawkish or vice versa. That is, the Fed says they're going to cut slower and the UK says they're going to cut faster. That's the only time we see this continuing lower, or if the market thinks that way. Yeah, so that's it with the pound. Next, Canadian dollar. Now, what is happening in Canada? We have this over here. Canadian dollar slumps as the Canadian inflation cools further. Yeah. So remember, they usually raise interest rates to control inflation. So if inflation is coming down, that means there's a high likelihood of them likely lowering interest rates even further. Yeah. So the market here believes Canada is going to lower interest rates faster than the US, and that is why we are seeing this uptrend. Why? Because the dollar is now gaining against the Canadian dollar. On top of that, we had Trump saying he's going to issue tariffs on Canada, and that is why we had this push over here. So if you combine those two reasons, it's not looking good for the Canadian dollar, and we might be we'll need to watch out for key levels. Are there any key levels? Yeah, there are. So you have one over there. Yeah. So what am I looking at for the Canadian dollar? I'll just be looking for retracements. This is an uptrend. So if you are using a trend following strategy, this is probably a very interesting pair to follow the trend with. Unless something happens in Canada that is out of the unexpected, it's likely that we will see this act as is. Yeah. Lastly, I'm going to just cover gold in the interest of time. Gold has been very tricky of late, but we are basing our analysis on the trajectory of the dollar, because I don't think there's a lot of major news around gold at the moment. Yeah, so for gold, what do we have? Just that. Let's see. So we had an attempt, this is on the daily, we had an attempt to break lower. Yeah, so technically we are in a downtrend. What is the confirmation? In the event we got that point. So technically we're already in a downtrend. Yeah. However, if we start seeing gold close above key levels, then my big suspicion is just a minute. That. So we have that zone over there, because this is where we started selling. So if at all I see gold persisting above this zone, then there's a high likelihood we are resuming the uptrend. Yeah, if at all that happens. However, at the moment, gold looks very suppressed. This is your final layer. If it passes this point, because this is where we started selling aggressively, then we can start suspecting maybe we are looking at higher highs. Having said that, thanks so much for attending today's morning market call session. My name is Samson Mzera, and it has been a pleasure to have you guys. We will be skipping one day for these sessions because it's kind of a holiday season and guys are a bit slowing down with activities. However, you're still looking at the markets as we head into the holidays. And having said that, kindly analyze JPY. Okay. All right. JPY, Japanese yen. JPY, you have this. Let me just put this. For Japanese yen, we have this piece of news here. So Japanese yen is very interesting because they're the only country with negative interest rates. Yeah, so Japanese yen struggles to lower by. What does negative interest rates mean? It means even your savings are charged. That means they're trying as much as possible to make guys borrow, spend, and not hold money in banks. Why? Because the Japan economy has been in a slowdown for quite some time right now. So that is why if you look at the weekly, for example, not even the weekly, the monthly, the Japanese yen has been weakening for a very long time because of those negative interest rates. Now, what is the market looking at? The market is looking to see, are we going to start or to finally see them raise their interest rates from negative, they come back to positive territory. Yeah. So if that's the case, that's when we'll start seeing a downtrend in the Japanese yen. And we have the news for Japan coming out also. Very important to note. You're not necessarily looking at whether they will hold or pause or whatever. We are looking at the statement and the press conference. These are the ones that are important. Why? Because this is where they're going to say things are looking good, we'll start raising interest rates, or things are still bad, we might hold interest rates. Because again, the market is moved by expectations. So this is tomorrow, tentative time, but this is something to pay a keen eye on if you want to trade long term the Japanese yen. Okay, having said that, thank you so much, guys, for attending today's session, and we will be in another session on Friday, same time. Please be sure to also come with notes, notebooks, so that you can at least note down a few things here and there. Other than that, again, thank you so much for attending, and see you in the next session.